I have a UK passport. Can I get a mortgage when I'm living abroad?
Absolutely, Paul. Yes, you can.
How does that work?
Really simple. You can either have a property in the UK that you already own, you perhaps lived in, or you can be looking to purchase something new in the UK.
So I've just relocated to Dubai with the many hundreds of thousands of people, so we're led to believe, and I'm living in Dubai, I've got my home, and I can get a mortgage on it if I want to.
Absolutely you can. So if you're already renting that house out in the UK, or you're looking to rent it out, we can help you potentially with a mortgage.
And what does that look like in terms of loans to values, minimum incomes, mortgages, etc.? What's the kind of key criteria that I need to be aware of?
Absolutely. So up to 75% loan to value we can look at for you.
So for example, then if that was a simple math, £500,000 property value, that's £375,000 maximum mortgage, is that correct?
Absolutely.
How would it be assessed? Is it based on the rental income or my actual income now I'm living, say, in Dubai?
So we just purely and simply look at the rental yield for that property. How much are you getting as rent? There's no minimum income with our mortgages. We just ask that you can cover 3 months rental voids.
How do I prove that? How does that work in practice?
So it's either a rental assessment, which we get the valuer to confirm, or there'll already be a tenancy agreement in place if you've got a tenant already in the property.
And we have to prove 3 months rental void, or have cash in the background as
Cash in the background.
Okay, so ideally then, to overcome any shortfalls, it's 3 months worth of
rental yield. Yeah. So if you're getting £1,000 a month rental, we'd need to see £3,000 in the background.
Okay, and what else do I need to know then? So 75% loan to value, and then what does that actually work on affordability and calculation? So is there stress testing if I don't take a fixed rate? Is it right in saying that if I take a 5-year fixed rate, there's no stress test? How does it work in underwriting?
Absolutely. So if you're not looking to use a 5-year fixed rate, we'll always have a stronger stress test. So it'll be a higher rate that it gets stress tested against. If you take a 5-year fixed rate, we'll stress test it against that monthly payment on the 5-year fixed rate times a percentage, depending if it's a purchase or a remortgage.
So am I correct in thinking that if I have a London property, the rental yield is normally lower, so the amount I can borrow is going to be lower?
Potentially, yes. If you look at the north of England, you have quite strong rental yields in comparison to property prices. So you might find in the north of England, you'll get a slightly better loan size or better loan to value than you perhaps would do in central London.
So UK base rate's 4.5% at the moment. If I go for variable, am I stress testing at 7, 8, 9%? What kind of level is the stress testing at?
You're looking at about 8.5%,
okay.
Whereas compared to if you were choosing a 5-year fixed rate, you're looking at less than 5.5%.
So for those that are watching at home, so a stress test is effectively you take 8.5% on the amount you've borrowed, which is 375,000 times 8.5%. That's the amount of rental income that you're going to need.
Yes, but then you've got your times percentage. So as an example.
And what's the times percentage? Because it's going to be so complicated, they're going to keep it as simple as we possibly can.
Absolutely. So let's just use 100,000 as an example. 100,000, it would be times 8.69%.
Is £8,690, which is
roughly £724
per month.
Per month. And then we times by another percentage. This is our buffer effectively if something goes wrong. If it's a pound for pound remortgage, we'll look at around 130.
So a pound for pound remortgage for people is, so if I'm borrowing 100,000, pound for pound means I'm remortgaging 100,000 with 100,000.
Correct.
Okay.
So you would times that by either 100 or 135% depending on the loan to value that we're taking. So if it's up to 60%, we'll do 130%. If it's above 60 up to that maximum 75, we'll go up to 135%.
And where do you get the 130% from?
That's our internal stress calculation.
So that's a very cautionary way to lend so that me as the borrower doesn't get into trouble.
Absolutely.
And you as the lender have a good, strong lending book that's safe and everyone's happy.
Very much so. If you're doing a purchase, then it's 145% stress test.
But why is a purchase different to a remortgage?
Because it's almost like it's a new situation rather than it being an existing situation, and the customer's got the experience of managing that debt.
Wow, okay. Fascinating how lenders come up with all these kind of like rules and different percentages for different things, huh?
Absolutely.
If my rental yield is lower, I can borrow less. Would you ever then look at my individual overall circumstances, i.e. my income, to help support or boost my remortgage application if I was remortgaging?
So at Family Building Society, no.
Right.
But there are lenders out there who would consider additional personal circumstances. Because we're saying we have no minimum income, we don't effectively assess income on a mortgage application,
that's clever.
which can be helpful for you.
So where would your key market be then for these types of clients that have no real income? Where would you be? What professions and things? Because if you've got no income requirement, that's kind of quite a niche, huh?
Yep, very much so. Often you'll find And it's not necessarily a minimum income that people struggle with, because they might be retired, as an example, so they'll have lower pension income, so it might just not meet some lenders' criteria in terms of what their minimum income is. You might have the self-employed. They've had a difficult year, and the time that they're looking to do it, their income's just that bit lower, but they've got plenty of cash in the background that would help support that mortgage.
That's clever. So effectively what I'm trying to work out in my world is where and how I would use your lender. So if I'm self-employed, most self-employed people that I know try and structure themselves to pay as little income tax as possible, so therefore the minimum income requirement would be a perfect tick in the box for me, so that I do want to remortgage my existing home back in the UK. I may want to remortgage my existing property to then buy another property and build a property portfolio, but because I'm self-employed, I don't want to be paying lots of tax. Obviously, if I'm living in Dubai, I pay zero tax.
Yep.
So it's just structuring your overall circumstances. But then how many later life borrowers then, so people age 65 to 95, because I understand you can help people that are later life borrowers, would be living, I suppose a lot of people may have gone to live in Spain.
Absolutely. If you look at France, Spain, Portugal, we get an awful lot, or even Australia for that matter, we get a lot of clients who've moved abroad, decided to retire out there for a bit of warmth, a bit of sunshine. You know, as a Yorkshireman myself, we don't see the sun a great deal, so we see a lot more rain. Going over to the Spanish costas, etc., a lot warmer and brighter for them.
And you have a great appetite to help British passport holders that live in Europe.
Very much so. Absolutely we do.
And why does that cause a challenge for others? Because I've heard some crazy things that because of GDPR and things.
Absolutely. Different lenders have different criteria. Some will post offers, some will send them DHL, etc. We send our offers DHL, so they're hand delivered to the customer. So we're less concerned about GDPR and posting that piece of post to the client.
How ridiculous is the rules? So because of GDPR, you wouldn't email, you would get it couriered DHL direct to the person.
Courier it. Absolutely, we courier it to the customer.
So if I'm British passport holder living in Spain, France, Portugal, Italy,
Yep,
anywhere.
Portugal, Italy. There's just the odd exception, somewhere like Malta as an example. It's just not on our list at this moment in time. They don't conform to all the UK anti-money laundering policies, etc. But most of Europe, we also include places like the USA, Canada, and then some of your more southern nations like Dubai, Saudi Arabia, India, China, all within our parameters.
Fantastic. So that, in our terminology in the industry, would be expat buy-to-lets.
Expat.
For normal people, I'm British, I've got a British passport, and I'm living abroad, and I can borrow money from a UK lender to buy property in the UK. England, Scotland, Ireland and Wales, or just England, Scotland and Wales? Or
Just England and Wales.
just England and Wales. Reasons for that is legal.
Legal, for specifically Scotland, it's just a different legal system and not one we're able to attach ourselves to at this moment in time.
Why do we make things difficult, huh? Why can't we just have one
system.
Yeah, one system for everything will make life so much easier for everything, huh?
Yeah.
All this unnecessary cost and
It's a complete
bureaucracy.
different system in Scotland. You know,
Yeah.
you put your offer in and it's accepted, you've got to be good to go. Whereas in the UK or in England and Wales, it is a different system.
Okay, so age criteria, I can lend or borrow. I can borrow up to age 80.
The last time you can apply to us for a buy-to-let mortgage is age 89.
Wow.
That would be for a 5-year term.
So if I was 89 years young and I wanted to buy my first buy-to-let property, it is actually possible.
It is possible, yes.
Wow, 89 and borrowing.
The average client we see, with the best one in the world, is between 60 and sort of 80, 85 years of age.
There's a lot of active people still doing
A
that.
lot of active people. You've got portfolio landlords. Portfolio landlords, they'll want that income for the rest of their life, and we can be a helpful tool to those clients to do it.
And so many people think traditionally that you have to pay off your mortgage by age 65,
Yeah.
when really for some people, I mean, I had it when you were very good and were lending in Guernsey, and there were a number of people who were, let's say, getting divorced at age 70, and we were able to help a couple of people actually buy their own property age 70 years young and put it on a 15-year repayment term.
So here's a simple question. Why on earth would you see a 70-year-old as being a higher risk than a 40-year-old?
Interesting point, huh? Age is just a number.
Age is just a number. And we're all getting older.
Yes, it's true. And what about maximum loan sizes? So, and what about, let's start with that, maximum loan size?
Technically, we don't really have one, but the higher it gets...
Because the rental yield is going to determine the amount you can
Correct.
borrow. It's not the actual loan size, it's the rental yield.
As an average, you'll see most loans being somewhere between 100,000 and £2 to £2.5 million as a rough guide.
Yeah. And then portfolio landlords, you mentioned them. So I'm 70 years young, I've got 20 properties, let's say I'm borrowing 2 million. How do you stress test and underwrite those sort of portfolio landlords? So let's say I've got a portfolio and I want to add to it. How does that work in practice? Do you have any limits?
It's only what you bring to us that we stress.
Okay.
So if the client's got 20 and you want to bring one to me, we just look at that property and do the stress test on that because it's got to meet our criteria. The other 19 in the portfolio, no, they just have to effectively be washing their face. And what do I mean by that? Is literally, are they making a £1 profit across the remaining 19 properties? Because those are with other lenders. They're not our concern overall. It's the ones you bring to us.
And then with the expat buy-to-lets, is it interest only or a payment? How does that work?
All interest only. Anything that we do with expats is interest only.
And why is that?
Because you have a different system. You have to track the currency and the rate on a daily basis if you're doing capital and interest. So we allow...
Why? Why would you do that?
Because that's what the rules are.
Who makes those rules? That doesn't make any sense to me at all. It's kind of... I'm very anti-rules today, I have to say. It doesn't make sense.
What you can do, though, is overpay by up to 10% of the original balance that you borrowed. So,
so that makes more sense. So basically, I borrow interest only. I don't really want to be on a payment, but if I did, I could, but it makes it more complicated to underwrite, is what you're saying.
Yes, and it means we have to watch the exchange rates on a daily basis.
Yeah, unbelievable, huh?
There's a specific rule around, I think, is if the currency exchange rate changes by more than 20%, you have to start writing to your customers on a regular basis.
Who makes up those rules?
It's FCA, PRA, all those.
Wow, I think we really got to make things a lot simpler in our world in terms of doing business and things. Having travelled extensively, and the more time I spend in the Middle East, they kind of want people to be successful. They want you to do well. They want you to make money and then go out and spend and enjoy life. And
that's partly why we do lend to clients in older years. Whilst we do look at younger borrowers on buy-to-let, it's the number of borrowers we'll help in later life doing these mortgages for far later than most high street lenders will do. And they're often the ones that are moving abroad. You travel extensively, but it might be in later life you decide you want to actually go and live in
no,
Dubai.
I mean, I have to say right now, I mean, age 54 years young is kind of like spending the winter and the summer in the sunshine does appeal. It was kind of nice traveling the last few weeks, leaving what was wet, miserable and cold to seeing the sunshine, and then coming back in March and the sun is shining and it's beautiful blue skies. The sea temperature hasn't really warmed up yet, but it's still amazing to see the sun.
But that's why we do it. So we look to help these clients in later life, and means that they aren't just a number there. We can look after them, and it means they have options, which many lenders don't help them with.
So from your perspective, you're a niche specialist lender helping people with complicated circumstances, whether you're self-employed, needing interest only, or I'm age challenged, 65 to 85 and living abroad, and you can help as long as I've got a British passport.
Absolutely. We're a building society at the end of the day, Paul, so we can't necessarily compete pound for pound, rate for rate with some of the high streets. They've got much bigger buying power than us. So we just look at other areas that we can fit into that are underserved in the market, and that's what we do.
Fantastic. So Paul, thank you so much for sharing and educating us on all of the things you can do and helping so many different people when they've got a British passport and they're living abroad.
Absolutely, no problem at all.
Thank you.